Now, as we start the week off, we are dropping below the 10-week moving averages. Again, I told you to be watching. If we break the 50 period in the daily time frame or bounce off those levels, take out these 10-week moving averages in the weekly time frame. Now, again, you get one bar per week. So we'll see what it looks like by the end of the week. And if we continue to drop, the 20-week moving average is support. Currently, it's just below 5,000 at 49.60. Well, 49.70 rounding up, 49.70. Now over here, we took out the 10-week moving average, bounced off the 20, and went and got a lower high. Do you think something like that, or do we try to get a recovery before the week ends? Two things rattled the stock market today. 10-year yield jumped, new recent high. Concerns about an immediate response by Israel for Iran's attack over the weekend. So I'll be watching to see what this looks like by the end of the week. But the bar is turning red. You see the little red arrow there. So again, the signals are starting off weak here to start the week off. Our second red awesome oscillator bar. And as I've said, again, sometimes you get the turn immediately. Sometimes you get these red bars and you still go back up and visit highs. Like I said, if we drop below the 10-week moving average and stay below it here, then that's going to be bearish for the market. The S&P lost 1.20% down, 61.5 points for the session. S&P weekly here. For the NASDAQ'S taking out the 10-week moving average. It had done it slightly there with the close from last week. See again the little red arrow. You can see the little red bar taking out the 10, taking out the lower boundary of the cloud. That gives it a reversal of conditions here. Same thing. We had bounced off the 20 period over here and then rebounded back up and got a bigger sell-off. Back when we had the top on NASDAQ, and same thing for S&P, we started to break the 10-week moving average, continued on to break the 20, tried to get a rebound, and it failed and stalled at the 10-week moving average. So again, 10-week moving average, really an important moving average there in the weekly time frame. And we've got these divergences that are beginning to drop now below the 10-week moving average. And again, the divergences like here on the MACD here in the weekly time frame. I've been talking about these at great length and detail. Again, I told you there was still a possibility of a rebound back up. We were going sideways and forming a triangle. The triangle is broken down now. The NASDAQ daily chart, we saw momentum late last week shift right back to bearish. Again, going to be watching these weekly charts. NASDAQ tried to flip the momentum back to bullish last Thursday, but then quickly the move failed and dropped right back below the 10 and 20 period moving average, trying to bounce off that 50. Now we're breaking the 50. And I told you to be watching. Do we break or bounce? Here we bounced. Here we bounced. Now here we're breaking. So again, below the 50 period, that's going to be problematic, lead to a bigger drop. But like I said, bullish divergence is forming on the 60-minute charts. They may be canceled out if we get an immediate response from Israel. That could happen. That could rattle the markets. Divergences may not play out. Divergences. It's just the intraday time frames. The negative divergences on the weekly and the monthly and the daily starting to play out here. So keep that in mind. We dropped on NASDAQ today. We dropped 1.65%. So from the highs now, we're down about 5% on the NASDAQ. So again, we're below the 50 period. That's a sign of weakness. MACD is now dropping to the center line here. It's just barely above it on the MACD. If it moves into negative territory and stays there, again, see a bigger drop in the market. About if we try to rebound off the 50, we could see the Awesome Oscillator turn back up. Awesome Oscillator broke into negative territory today. And again, that MACD is just above the center line, just like NASDAQ. So again, are we going to go ahead and go negative and get a bigger drop and start moving down towards the 100 or the 200 right here, period moving averages, buy a little bit more time and get a relief rally. And back over here, the trend line, we came back, we went 3 points above it, formed a little miniature double top, and the signals, momentum signals turned bearish. We dropped below the 10 period. We've been struggling at that 10 period. Do you see this? Now the 10 period's crossed the 20 period. Tried to bounce off the 50 period. So far it's failing. The S&P, again, down 61.5 points, down 1.20% today. Now, again, we're going to be watching if we get further volatility as tensions heat up in the Middle East. Concerns now about a A regional war, concerns that this escalates further. Told you, again, be watching to see if we get an immediate response. That could rattle the market, or if there's a delayed response, then the market may attempt a rebound. Doing technical damage now. We're taking out the 50. We're taking out the lower boundary of the trend line of the triangle on NASDAQ and breaking horizontal support, our 7-week trading range. We're taking it out. So if we hold below the 50, that's bearish. If you can get it back above it, you can recover. But again, we're now doing some major technical damage on NASDAQ. Watching if Wall Street Journal is correct. They're saying their sources are telling them that an immediate response within 24 hours. That's what the Wall Street Journal is reporting. A few other news outlets are saying similar things. Well, they were reporting that Iran was going to attack Israel in an upcoming weekend, and it didn't happen until the following weekend. So we'll see what happens. And again, it could be either one. We just simply don't know. Paying attention to this because, again, this could really rattle the market. Well, we're getting a nice drop on the S&P 500, and I'll be showing you my momentum and trending models a little bit later in the video and the risk model. Support the channel with the link directly below. Take a moment to do that. I would really appreciate it. Follow the link below. It'll take you to a secured site. All donations are welcome. Have any sponsors, just a direct relationship with you. Please take a moment to try to do what you can to help out. I would deeply appreciate that. Thank you for your consideration for that. Now we had the 10-year Treasury note yield jump by over 3%. It closed under 3% today, but it did jump today, and that rattled the market, and also concerns about an immediate Israeli response to the Iranian attack over the weekend. Continue to point out that the 10-year Treasury note yield has broken the downtrend. It backtested it, and it's now broken above overhead resistance. I told you that is bearish for the market. We're now starting to get volatility here, and we've seen NASDAQ drop by 5%. S&P has dropped now over 4.5% from the highs. And we had the dollar up on Friday, and the 10-year yield was down, and the dollar was up there, and it continued to go up by 0.2%. We've had both the dollar and the 10-year break out of bull flag patterns, break their downtrends, break overhead resistance. Dollar is now clearing the 20-month moving average. That's bearish. That's when the NASDAQ, last time that happened, the NASDAQ peaked in 2021. The dollar in the weekly time frame has broken the downtrend, pullback, and then now it's broken above overhead resistance. And all things warning the volatility was coming for the market. We're now starting to see that. I'm watching these bullish divergences very closely in the 60-minute time frame because, again, we're dropping below the 50-period moving average on NASDAQ and S&P in the daily time frame. We're still forming these bullish divergences, but I'm watching the Dow closely because it has 3 gaps that have not filled. But here's a bullish divergence on the RSI here on the Dow 60-minute chart. And we've seen pring parameter go into the negative region with the divergences playing out with the Dow. And the Dow dropped again today. It's dropped at least 6% since it peaked. Again, back over here at where? The trend line. Remember I was telling you about these trend lines? S&P and the Dow and the NASDAQ. Sellers lurking there. Guess what? Peak of stinking boo. There was. But we've got this bullish falling wedge. If we attempt some kind of recovery, if we can get a recovery on the Dow, and again, just because you have a bullish falling wedge, you may just drop on through the lower boundary of the wedge. It may not play out, but you have the divergences, so I'm paying attention to it. If there is an attempted recovery, say there's a delayed response, and we get some earnings that the market rallies on or something or whatever, or the 10-year ups significantly, whatever, I'm watching this trend line right here on the Dow. I'm watching to see if it rises back up, does it back test and go back and try to fill those gaps, or not? Do we just go on and move into a free fall? Dow is the leadership. It's leading the market lower, but led it higher. So just some trend lines I'm watching. Do we break out of the downward bullish falling wedge, and do we back test this one? So pay attention to that. But again, this is very bearish. You're seeing parameter go negative. Saw that over here, and we went back up and we tested the 200 period and went back and rejection at it. So again, do we come back up and test that 200? And if we get above it, you have this trend line. If we see the market rattled further, then again, we may not fill those gaps to a much later date. But even if we rebound back up, this is extremely bearish. for the stock market that we've had this happen with the Dow, as I've been talking about. Bullish divergences are forming on the intraday chart, so just something worth paying attention to. Got all these gaps on the Dow, and remember, NASDAQ and S&P filled the gaps up at the top here, and filled the one from late last week. We got there on Friday when we gapped lower. The Dow has filled none of them. So again, watching these divergences, I'm not interested in the Dow. Show the S&P, show the NASDAQ. I'll show those, but again, I'm just telling you, these gaps are interesting because they haven't been filled. So again, you do have these divergences. Divergences can be canceled out, but you do have divergences forming on these intraday charts. Again, today with the session, we gapped higher and then we turned back down. So now we need to be watching to see what happens here for the three gaps on the Dow in the 60-minute time frame. And again, if we go up and fill this second gap here, then you're coming back up towards the 200. You can get beyond it, move towards this one, then maybe you're back testing the broken trend line. So we'll be watching if we get a big sell-off in the market. Maybe these gaps don't get filled until a later date. Well, now here is the S&P 60-minute chart. And again, I talked about this channel. We broke down through it. And again, we did gap higher. Initially gapped higher. Stopped at the momentum line and momentum cloud and turned back down and came down. And we closed near the lows of the session. But you still have these bullish divergences. Now, again, sometimes divergences get canceled out. But more often than not, they play out. There is no bullish divergence on the MACD in the 60-minute time frame. And again, I want to continue to point out the MACD, it went negative. Okay, tried to rebound back up and couldn't do it. Rolled right back over. It's been in negative territory. And again, when that happened, we had formed the diversions. We put in the peak. We went 3 points higher than this previous peak. Remember we talked about the sellers were going to be lurking right here at this trend line. We formed a little miniature double top pattern. And then we turned down, and when we turned down, we began to go negative, tried to rebound here, and you had a gap and trap. And remember that waterfall sell-off I talked about? The rebounds have only given us lower highs, lower highs, lower highs, at least so far. So while the Dow has not filled any of the three gaps, the S&P still has the one back over here to fill. And again, it may not fill it until a later date, may not fill it at all. But again, it is a possibility and something that should be paid attention to should these divergences attempt some kind of recovery. Warning you about taking out the 200 period moving average. We took it out here, we bounced. Then we took it out here and we bounced. And then we took it out here and we bounced. We bounced, okay? But now we're taking it out and we bounced and we're staying below it. So that's problematic. If you can get above the 200, you could try to get recovery. But as we're doing that, the 50 is crossing the 200 now. We'll see what happens. But again, I'll still be watching this gap right here, seeing what happens with the bullish divergences. But again, we are taking out the 50 period moving averages. If we can get in the daily time frame, if we get back above those, you can get a rebound. If you get a rebound, you want to be watching the 200 period moving average. That's this black line that is now flattened out and starting to curl down now. It's starting to curl over here. Okay. Also, the support and resistance line, it's a little orange line right there. We've taken it out. On the way up, acted as support over and over again. Then we started breaking it and trying to rebound, break it, rebound, just like the 200. But now, again, it's rolling over and pointing down. So if we stay, if we just recover back up, if we stay below that level and the 200 period, then that's going to be bearish. If we just move into a free fall, holding below the 50 period in the daily, then we want to be watching the 100 period moving average, 200 period in the daily time frame. So I'll be watching the diversions here. Now momentum is oversold, but we have not attempted a rebound. We do have this gap right here that we are filling on the S&P 500, and there's gap support right here directly below. But the possibility that we could have a head and shoulders pattern. If we do rebound, again, we have the gap fill, which is directly above the 200 period moving average to be paying attention to. And if you do go back up, you do have the possibility of a right shoulder for a head and shoulders pattern. That is very, very possible if we stop making new highs. Again, I talked about in great length and detail how the trend line was acting as resistance. It's the Fed meeting. I told you that, again, we can get a post-Fed sell-off. But I told you we might go up and hit that trend line with the Fed or get it after the Fed and then begin to sell off. Well, that's exactly what happened. But we went sideways. We turned down, we went back up, we got a low miniature double top, and then now we've seen this sell-off. These now dropped nearly 5%. And I told you this was a great place. The shorts were going to pounce on it, and that's why I went short there. Because the market takes its time doing what it's going to do, then people go, oh, there's no way we're going to sell off. But yet we've dropped nearly 5% here from that level. Now, again, I'll be watching. Do we get a lower high? If we get a recovery, it's bigger than the gap fill. Should we get a rebound? We may just move into a free fall if the market gets rattled here, but should we get a rebound, at the possibility of the head and shoulders top, and then you have possibility of still trying to get a bigger rebound, able to get back above that level. We may not fill this gap right now. We may just go lower and fill it at a later date, but something worth paying attention to. We attempt to rebound with those divergences in the 60-minute time frame. The gap fill area for a lower high scenario, if we get above it, we still may get that divergence on the RSI in the weekly time frame. But look, so far, this resistance level, the bearish momentum, remember we got that bearish reversal of conditions, began to turn down, we got the bearish reversal of conditions. So far, those signals are playing out, spilling over into the swing trend signals. I should say the trending signals. And I think I said S&P down nearly 5%. I'm sorry, I was thinking NASDAQ there. S&P dropped 1.20%. It was down 3%, so it's down about 4.25%. NASDAQ down more than that, and the Dow down nearly 6%, 5.65% or so, something like that. Again, we had the rising wedge breakdown. We got confirmation. I told you we could see something like what we had with July, where you get this bearish engulfing, but it's validated. You know, the pattern's validated later. Confirmed, and we got a fall through now, but we've taken out our 50 period. We're hitting the cloud here. But here, we broke the trend line. You got confirmation, and you got the fall through. With that break, again, hitting our 50 period moving average. So again, this pattern, confirmation, fall through, as I talked about, and now we're getting it with the other trend line. That's now getting confirmation and a fall through. We'll see if we try to bounce or not, but you hold below the 50, you could get a bigger drop. 10's dropping below the 20 period moving average here. Our other trend line here from the more recent lows here, we broke that with the bearish engulfing. We back tested that trend line, and then we got on Friday the confirmation. Now we get the follow through. So you have confirmation and follow through with both of those trend lines. Signals remain bearish. Then the odds are that we have seen a peak with the high right here. If we get a bigger sell-off, or if to rebound immediately, getting back above the 50, then again, it's possible to get a larger divergence on the RSI in the weekly time frame. As I've said, other indicators have negative divergences on them, but if there ends up being a delayed response from Israel, the market just kind of shrugs off the risk, focus on some earnings, and still try to rebound. We'll be watching, but as long as we hold below the 50, that is a sign of weakness. So again, we'll be watching. The trend line was taken out right here. Again, we're still hitting some support in here. Lose it, you'll go back and fill the gap here. But if we try to rebound, again, we'll be watching the 50 period moving average. Again, S&P has taken out the 200 period in the 60-minute time frame. Parameters gone negative. As long as that combination is present, we can go a whole lot lower. Again, over here, just like on the Dow, we went into negative territory. Well, when you first did that, there was an immediate rebound back up to the 200. It failed. And then later on, we attempted to try to get back to test the 200, got back above it, but it ended up failing, and we did over here as well. So again, if parameter remains negative, we hold below the 200, then sellers are in control. So we'll be watching, but we did get a death cross in the 60-minute time frame. Again, we saw momentum signals turn bearish. Late last week, we began to see trending signals turned bearish, and now seeing more of that happening, taking out the 50 period moving average here. The S&P used to hold below the rainbow cloud. Positive power is negative. swing trend line and momentum line are both bearish, both pointing down. Some of the trending signals started to turn bearish late last week. Others turning bearish with today's move here. But again, we're seeing evidence now, some weakness. If we get a rebound, watching to see if we stop making new highs or not, or if we get a sell-off, attempt a bigger rebound, we still may try to form a divergence on the RSI, but we're seeing some real weakness here with signals. The trend line signal I talked about, signal that I'm playing very, very nicely here for the S&P 500. The trend line on the Dow, the S&P, we talked about all that back up at the top. Again, last week we saw the swing trend line turn bearish. The little line there going from green to red kind of went back and forth a little bit, but then it turned red and stayed that way. We broke the lower portion of the cloud there on Friday, being validated. Oscillators going into the negative region, and the swing trend balance of power negative there. So, and signals have been turning bearish from reversal of conditions, and now we're seeing trending signals turn bearish. It remains that way, and we'll see if we remain below the 50-period moving average. S&P broke VWAP support, and now we have VWAP resistance. We haven't been able to clear that, and we have another VWAP support level right here coming in directly below with the gap fill area here. So again, technical damage being done. P daily here. Critical mass has gone flatline. We've dropped below it. It is red. So again, as long as it's red, we're either going sideways or down. If it starts dropping, we can get a bigger drop. When we got it back above it, it acted as support. Momentum turned positive, remained that way. Momentum is now negative. Critical mass cloud 2.0 bearish. Again, we continue to have red bars. We're seeing now the critical mass line turn red in the red portion of the cloud, and it's being validated by the critical mass oscillator going negative. So again, I'm seeing some signals now spill over into trending signals. This is a critical mass 2.0, critical mass cloud here. And we're seeing my original critical mass cloud. Again, we've dropped below the critical mass line. It's now turning red, taking out the 50-period moving average. It's flipping the signal now, and you're getting a sell signal. So we'll be watching. Now, again, we could still have a sell signal and still get a rebound. You're watching, does the sell signal remain if those bullish divergences on the 60-minute charts begin to play out? The day trend and the micro trend have both changed to bearish. The one-day trend is this little line right here, and momentum going negative. But the signals tried to turn bullish last week, and we tried to rally, but the rallies really failed. So again, we'll see if we get a bigger drop now. Here, try to turn right back to bullish after turning bearish, turned right back to bearish, and again, taking out the 50-period moving averages in the daily time frame. We'll be watching the bullish divergences that are forming on the 60-minute charts. Do they give us a bounce or not, or do they fail? Again, on Thursday, we moved into a risk-off environment. We see risk-off. We see the S&P trend trying to change here. Tried it a couple times, and now it's doing it again. So we'll see. And then the risk line has gone negative. So again, the risk model is showing that we are currently in a risk-off environment, which is bearish. And up here I have the S&P 500. So again, now doing technical damage. We get more, we can get a bigger drop. We're trying to form bullish divergences. We'll see if they attempt to play out or not. So how big of a bounce do we get? Tensions in the Middle East rattle the stock market further. Get an immediate response or a delayed response. So how does that impact the stock market? So we'll be watching all of this. At the moment, we are currently in a risk-off environment of last Thursday. Now, NASDAQ, we've been watching the triangle. NASDAQ's been going sideways for 7 weeks. So has Bitcoin. Bitcoin broke down from the triangle, so did the NASDAQ. Those can be reversal or continuation patterns. Now again, we had the rising wedge for the NASDAQ, just like the S&P. It broke down, and then it back tested it up to a new high, got the black candlestick, and now we've taken out the 10 and 20 period. We've struggled there. We got the reversal of conditions. Went back to a bullish reversal of conditions last Thursday, and then went back to a bearish, and now we're taking out the trend line. So again, you're taking out the 50, you're taking out the trend line. Hold below the 50, you hold below the trend line, that's bearish. Got the 100 down here, you've got the 200 way down here. So again, we'll be watching these levels. You rebound back up, got to get back above that 50 now. We're seeing these divergences play out here sideways for 7 weeks, but now we're getting a breakdown. And if we hold below, if it's a legitimate breakdown, you got to hold below the 50 and hold below the trend line. So we'll be watching those levels of resistance. For support, now the resistance. That break, I told you we are going sideways for 7 straight weeks, and that's marked here with this rectangle right here. Here's the triangle. We're breaking down from the triangle. We're getting rejection at the 20-period moving average here at the highs for the session and for the Friday session. Couldn't get back above the 20-period moving average. Turned down, broke the trend line, and broke this horizontal support level here. So again, this is huge because we're seeing a breakdown of the triangle and we're seeing a breakdown of support. I told you to be watching. Do we see the triangle break up or do we see the triangle break down? Which is it? We're seeing it break down now here for NASDAQ. If we go back and back test the triangle, we'll move back into the trading range. But again, got to be able to get back above the 50, back above the trend line of the triangle here. Whoops, a little bit too high there. I did the blue trend line. It's the black one here. If we back test the trend line, we'll still move back into the trading range. But you get back above the 50, you get back above that trend line, then you can rebound. You hold below these levels, that's bearish, and we could go a whole lot lower. NASDAQ's now dropped 5% from the highs. Remember I talked about hitting this trend line right over here? Others were going to be lurking over there. We tried to push up through this level just a bit. That black candlestick, and you couldn't close above that high. P only moved 3 points. It peaked over here. NASDAQ got a lower high. We're doing technical damage. So if we get an immediate response from Israel, we have more volatility. The delayed reaction, we still may attempt some kind of rebound. I wanted to show you this because we're now doing technical damage, taking out the 50, taking out the lower boundary of the triangle. NASDAQ 100 was down 297 points today, down 1.65%, closed near the lows. Now here's the 60-minute chart of the NASDAQ 100. It's becoming oversold here, but has taken out the trend line, the lower boundary of the trend line. It has taken out horizontal support. This was gap support over here. And again, it's held as support. And now we breached this level. You got the gap down here, the gap fill area down here at about the 17,460 area or so. We have done the technical damage on the NASDAQ now. And again, if we do try to rally back up, I'll be watching the broken trend line right here. I'll be watching the 50-period moving average in the daily time frame. But you've had a breakdown of the triangle. You've had a breakdown of the trading range in the rectangle as well, breaking the horizontal support with gap support. Some technical damage being done here. Still have the gap back up here. Again, we gapped. We had this gap higher, and we went up to the upper boundary of the trend line here of the triangle. We gapped lower there. On Friday, again, we've had signals with momentum go from bullish to bearish as we've gone sideways here. Went back to bearish on Friday. Now we're breaking down. So we still have this gap up here that we'll be watching. Again, these gaps may not be filled until a later date. Today we saw futures rally, and then it turned back down, and I'll show you what's going on with that with the S&P 60-minute chart. But again, we've gone sideways here, and now we're starting to break down. At least for now, we will need confirmation and a follow through if we're going to keep going below that 50-period moving average. We'll see if we back test these breakdowns here. If we get back above move into the trading range, that trend line is really, really important. The moving averages are directly above it with our 50-period moving average and the 200-period moving average, which are now getting, again, a death cross. Again, I want to continue to point out, we've had the rising wedge. We broke down from the rising wedge. We back tested the rising wedge. It was a rising wedge into this upper channel here, parallel channel. Sideways for a little while. Those divergences are starting to play out now. So again, we'll be watching. Do we hold below the 50? Breaking it today. We tried to bounce off of it there on Friday. Do we hold below the 50? Do further technical damage? Or do we try to get back above it? This is what I'm going to be watching. But these divergences so far, now taking the S&P down about 4.25%. talk more about the S&P, but again, want to continue to monitor this channel. Friday, the VIX was up over 10%, and today it was up 11%. So it's been up over 10% for 2 days in a row. So again, this means as we start going parabolic to the downside on the S&P and parabolic to the upside on the VIX is predicting an up day for tomorrow, 85% chance of it, 15% chance it fails. From today's price action for Tuesday and Wednesday, this is predicting that we get an up day. So get an up day tomorrow, then that would fulfill the VIX prediction for both days. But again, I'll be watching. We're still right at this trend line in the weekly time frame. I continue to point out the VIX, S&P went higher. The VIX didn't move lower. It got a higher low. It formed a discrepancy with the S&P 500. Holding above the 200, the 50 is still below the 200. We'll be watching to see we try to soar above the trend line, or do we get a pullback? Came right up to the trend line right here from this high to this high to this high. Came right up to it. We're slightly trying to hop above it. This trend line, though, we broke above that. We tried to break above it on Friday, couldn't do it. And here on this trend line, we actually broke above it. So it's two trend lines I'm kind of watching. And then this one from back over here as well. If the VIX begins to turn down, then again, we'll be turning off that trend line. If we can get above it, then we can get a bigger drop in the market. Starting the week off with the MACD going positive. That's bearish for the market when the MACD on the VIX in the weekly time frame goes positive, and the stochastic clearing the 50 level. It was just right there at that level as of last week's close. So we're seeing that happen, kick off the week.